Hey guys, Percussive Dev here. So today I'm going to be explaining to you why I think silver is a better investment than gold. So in order to first understand why silver is a better investment than gold, we want to take a look at the gold to silver ratio. So what is the gold to silver ratio? Well, the gold to silver ratio is just a number that tells us how many ounces of silver we will need in order to have 1 ounce of gold. If the gold to silver ratio is 25 to 1, that means we can take 25 ounces of silver and that'll equal 1 ounce of gold. The gold to silver ratio is also known as GSR. So if the current ratio is, let's say, 50, then that means it takes 50 ounces of silver to get the value of 1 ounce of gold. Now, you might be asking, why does this really matter? When the gold to silver ratio is really high, let's say 100, that means it takes 100 ounces of silver just to get 1 ounce of gold. This means that the price of silver is actually undervalued and is expected to increase in relation to the price of gold. If we take a look at our historical chart, we see that normally you want the gold to silver ratio to be about 40 to 1, or 40 ounces of silver to 1 ounce of gold. Again, we're talking about value here. As we can see, the current price of gold for 1 ounce is at about $1,800, whereas the price for silver is just under $20 an ounce. Taking a look at our gold to silver ratio chart, we can see that the gold to silver ratio is at just above 90. Looking across to the rest of the chart, we can see that this is actually very high compared to other years on the chart. With the ratio being so high, this indicates to us that the value of silver is still undervalued. So it's better to deploy our capital into silver now before it increases in price, again, in relation to the price of gold. Usually this drastic change in the ratio occurs whenever there's some sort of recession or panic in the market. So clearly, with the 2020 crisis that's occurring around the globe, there has clearly been a great demand for gold, but the demand for silver hasn't caught up with the demand for gold yet. Once a recession truly hits the entire globe, there will be an increased demand in silver, and therefore the gold to silver ratio will return back to normal. So silver will go up in price, therefore shrinking the gold to silver ratio and returning the price of silver to a fair value. Now, I also did want to point out, if the gold to silver ratio were to truly shrink, let's say 20 to 1, then clearly that means that the price of gold is actually undervalued, and then it would be a great time to purchase gold over silver. This is why I think it's very important to keep an eye on the gold to silver ratio to really see where you're getting your value. I hope you guys enjoyed today's video. If you enjoyed, please make sure to smash that like button. Don't forget to subscribe if you haven't already. Thanks for watching.